Hi traders, off the floor trader here. I wanted to bring you a video this evening. We've been posting some charts on gold that's getting ready to set up or in the midst of setting up, and I think this is important to actually speak on it. I see a lot of posts with all these great indicators, and while we use a couple of them ourselves, we don't rely solely on those indicators. We've been trading for over 16 years now, and you learn that patterns and price in the marketplace is what we look for. Really, price is the only thing that does pay and that can tell you what's really happening. But also patterns, and people can tell you that patterns don't work, and that's a bunch of bull. But I mean, patterns work phenomenal. I mean, if you go back and look at historical charts over the last 100 years, you will see the same patterns showing up on a regular basis. And what patterns do, and I want to talk about this before we go in and take a look at what could happen here in gold. But patterns are telling you what the behavior of the market is. In other words, what are humans doing? That's why the patterns show up all the time, because it's human behavior. So what is happening here? Let's go back a little bit. This is a weekly chart of gold, and we have seen. Oh, I'm sorry. This is daily. Let's go back to weekly. All right, so now we're at the weekly chart here, and you can see after we skyrocketed back in 2009 to these highs up above 1900, we started sort of going sideways. Even though there were some great swings in intraday, and even on a swing basis, there could have been some nice plays in here. But you can see we eventually chopped around until we actually formed another pattern, which was a wedge. It's one of our favorite patterns, but there was probably a few of them in here. As a matter of fact, I'm sure of it because we traded a lot of them within this wedge itself. And you can see actually another wedge within inside this big wedge. But you can see when these things do move, they move. That's why we like them, especially on a weekly basis. And this one here, when this broke back in December of 2012, it consolidated for a few weeks, and then we saw these big long weekly candles, big sell-off, small pullback, big sell-off, small pullback, big sell-off, small pullback. You get the picture? Then we started bouncing around again, and we started consolidating. Okay, before we took out the triple bottom. Now they just poked their head down there below the triple bottom, and as you can see here, we are still consolidating down here below all this mess, which really tells us that this market does want more downside, but we are creating that pattern that we really like. And right now, actually, the pattern's up at the top of the wedge. I'm not so sure this is going to break out or not to the upside. It would sort of shock me. I know some people have been calling for it. But nonetheless, if there was a lot of big buying in this thing, I think we would have saw it already. They would have stepped in and started buying this, and I just haven't seen it yet. Especially with the dollar spiking right now, I can't see that gold is going to spike unless the dollar starts to come back a little bit. But anyway, let's take a look at how this could be played. We will never try to guess the direction in the middle of a wedge like this. Now, what typically happens as it came down and bounced up and then broke this triple bottom down here, and then started to bounce back up, people got short up in here. They were looking at that former support turns into the new resistance, and they were looking to take out those lows, go down into that 1100, which we actually like that number down there. But it started going sideways, so people would get stopped out, get chopped around a little bit. We as well, we took a small dinger in there, and we did a couple small wins. They were really small, nothing to write home about. But now here we are in a pattern. We will not get involved in this until we see a break, okay, and then some type of pullback or pause. So let's take a look at this. If for example, this does decide it wants to go to the upside, let me get my candles correctly here, guys, then we would look for a move to the upside, and then either a small pullback, and sometimes they come back and kiss the breakout area. Gold is not typically like that. Gold usually goes up and likes to consolidate or at least slow down or pause up here. That is where we would look for another small pattern on a lower time frame and then identify our stop to get long into this market. Why do we want to get long after it breaks out? What if it's a fake breakout? Well, that could happen. If it is, and our stop is very small, we won't risk very much to get involved in this trade. However, if we are right, then let's take a look at what could happen, especially on a weekly basis. We saw this break of this up in this area. We saw that break up in just roughly 1631. It goes up into 1778. That's a phenomenal move. Then of course when we broke the wedge to the downside here, then what we saw is a move on those lows were 1622 all the way down to 1184. Those are monster moves. See, in trading, guys, you have to remember you want your moves to be a lot larger than any stop that you'll ever take. And I'm not just talking two to one or 3 to 1. I'm talking 4 or 5 to 1. That's why you need to consult a larger time frame on a weekly and a daily. If you're struggling right now, you got your nose in 30-minute charts, and you probably have your nose in 5-minute charts trying to look for setups. And yes, you can trade successfully with those. I've seen people do them. They're very good at it. They've been working at their craft for many years. However, it is a different ball game. And if you're not letting your market move and you're not able to get those big moves, and you're taking a lot of small losses, you're taking what they call a death of 1,000 cuts, and we don't want to see that happen to you. So what we look at, let's go back to this pattern here. We're going to look for a break and a pause, and then we're going to go down to a smaller time frame, and we're going to look for the same type of pattern, a sideways pattern, maybe a flag, a bull flag, a bear flag, a pennant, or something like that, and we'll look to get long. Okay, usually by the bottom of the pennant with a stop outside of the pennant or the flag, and then of course look for the break to the upside on volume. Now, if this were to go up and then come back down and take out the breakout area, go back into the channel, then most likely the next move is going to be to the downside, and we will watch that. We will maybe take a small position if it comes back in the channel and stays there. Okay, only if it stays there, but we will definitely wait again to the lower area to break before we get involved. We just don't want to play the chop game because it's just no fun, and it can really run your account dry on that. So be aware of that. We expect that to happen this week, and now if it does roll over and come back to the middle, maybe it won't be this week, but right now it's up to the upper channel. Let's see what the European session does. I'm not sure what news we have. I haven't looked at news this week to see what news events are happening, but nonetheless, that is an opportunity. Now, if you also want to see how we work patterns a little bit more, I would suggest you go and take a look at the charts that we posted for the euro, which is the E6 on this channel. On other ones, it's the 6E, depending on what platform you use, of course. Let's go to a daily chart here real quick. We posted everything from the bear flag here to the break of the bear flag and the pullback and the entry and target 1, target 2, and stuff like this. And we had to wait for quite some time. Now, in hindsight, of course, where we got flat on the second position, this thing popped back up. Now, I've gotten some comments on this. We would have been stopped out because once this thing started getting close to our second target, we immediately start getting aggressive with our stops to the downside, and we don't want to let it go. And of course, we would have been stopped on this move here. In hindsight, this thing has rolled out of bed. Draghi has no clue what he's doing over there. It's very apparent. So this thing is, we're not interested in selling it here, and we're definitely not interested in buying it at this point. But you go back to those those posts, and you will see that we went ahead and showed every step of the way and how we manage that. And that's very important for you to do as well. Other than that, let's take a quick look before I let you all go here. Let's take a look at the NASDAQ. We love the NASDAQ. We trade the NASDAQ quite a bit, actually. We were looking for triggers up above this this 42.75. We haven't got it yet. We're starting to get into a really iffy area here. We're just basically in a range, and for us, we want to see it up above this 42.75. If it gets up there and holds, we think 42.75 will be a good spot to get involved, to take out the highs, and of course go up to these targets at 44.01. This is a V bottom. Of course, this is a V bottom. We pulled back on one day on Friday. Now from here, this is a go or no go area. Either we're going to take out these highs and keep going, or they're going to roll it back over and try to take out the bottoms of these. So we're not going to guess which one. It for us, it's not a trade. Above 42.75 is a trade to the upside. Right now, I'm not convinced to the downside. They just repaired some stuff to the downside that needed to be repaired. We have a lot of a lot of open gaps and stuff like that, and they did a good job at doing that. So, anyway, guys, hey, listen, be careful out there. Make sure you have a plan and you're trading that plan. If you're not and you're struggling, stop trading right now. Get your plan written down. Make sure you know what you're doing. It's okay to follow people, including ourselves, but just make sure you're either asking questions of those individuals and that you understand their time frames, because even though you can look at something on one time frame, it may not work on other time frames and stuff. And we are mostly swing traders to small position traders that we love to capture large gains, and we will only take positions when we think we have a big opportunity to do so. We think gold has that opportunity right now, so keep that on your watch list. And if it fires, then good luck with it. I think we all should do very well if it keeps going, and then we'll go from there. Otherwise, have a great trading week, and hopefully we'll talk to you soon. Take care.